Hi everyone, this is Dao Chai. Okay, so we are going to be working on the CPA practice test sample question. So it's going to be in the business environment and concept section, right? So the question is going to be in the subject is going to be like cost accounting, and we're going to be looking into the contribution margin. That's what the question is focused on, and I'll go over that. Okay, so a little inspiration. So it is the mark of an educated mind to be able to entertain a thought without accepting it. Aristotle. Okay, so here's the sample CPA sample test question. So a U.S. manufacturer has a production operation in Mexico. The product costs 116 and 50 pesos to produce and ship to Europe, where the product sells for 20 euros. So if 0.1099 US dollars are required to buy one Mexican peso, and 0.8928 US dollars are required to buy one euro, what are what amount of the US dollar is the profit on the sales, right? So there are the selected options, and the correction is $5.06, right? 5.06, so $5.06. So how we got that is, right, so our production cost is 116.5 pesos. So we time that by our US dollar 0.199, so that will give us 12.80. And then we got our product selling cost in Europe, right? So that's 20 euros, and our cost is 0.892 US dollars, and that will give us 17.86, right? So so our profit for a sale would be 5.05, but it's 5.06, so $5.06. So okay, so let me go over what this is. Okay, so what we just answered was contribution margin, right? So here's an example, right? So I'm just gonna go over some examples. So we got a booth, right? Booth rental that costs 2,000, and that's a fixed cost because it will not change no matter what. All right, and we're working with Emma, right? And Emma is selling packages, right? So the cost of the package is a variable cost because it increases in proportion to the number of package sold, and she can return for full refund. Okay. Oh, excuse me, guys. I'm at the university library, so you hear students talking in the background. So sorry about that. So to understand how her operating income will change by selling different quantities of package, Emma calculates operating income costs if sales are 5 package and if sales are at 40 packages, right? So right here we got her revenues, right? Her variable purchase costs, her fixed costs, and her operating income. All right, so we got 5 packages right here, and then we got 40 packages. So that's how she came up with those numbers, okay? So take a look at that. So contribution margin, right? So that's equal total revenue minus total variable costs, right? So the only number that change from selling different quantities of packages are total revenues and total variable costs. The difference between total revenue and total variable cost is called contribution margin. Okay, so that's a definition. So contribution margin identifies why operating income changes as the number of units sold changes. So the contribution when Emma sells 5 packages, 400, right? So that's 1,000 total revenue minus 600 in total variable costs. The contribution margin when Emma sells 40 packages, 3,200, and that's 8,000 in total revenues minus 4,000 in total revenue costs. When calculating the contribution margin, be sure to subtract all variable costs. So for example, if Emma incurs some variable selling costs because she pays a commission to salespeople for each package they sold at the fair. Variable cost would include the cost of each package plus the sales of commission paid on it. Okay, so the CPA question, right? This one was kind of referred to per unit, right? So there was like contribution margin per unit. So it was the selling price minus the variable cost. So that's what the question gave us, right? So contribution margin per unit, all right, is a useful tool for calculating contribution margin and operating income. So it's defined, right? So that's what we just defined. So in the GMAT success example, the contribution margin per package or per unit is $80, right? So that's 200 minus 120. So the contribution margin per unit recognize the type coupling of selling price and variable cost per unit. So unlike fixed costs, Emma will only incur the variable cost per unit of 120 when she sells a unit of okay? So remember that. All right, so let's take a look at this equation real quick. Contribution margin equals contribution margin per unit times number of units sold. All right, so that's how you get contribution margin. So for this example, when Emma sells 40 package, right, her contribution margin is $80 per unit times 40 units, right? So that'll give her 3,200. So the contribution margin per unit provides a second way to calculate contribution margins. Okay, so even before she gets to the fair, right, her fixed cost is going to be 2,000. All right, so that's what we got for the rent booth. So because the contribution margin per unit is 80, and we'll recover $80 for each package that she sells at the fair. So she hopes to sell enough package to recover the 2,000 and to make a profit. Okay. Excuse me. Okay, so to get a feel for how operating income will change from different qualities of the package sold, right? She's going to prepare a contribution income statement, right? So the income statement is called the contribution income statement because it groups costs into the variable costs and the fixed costs, right? To highlight contribution margin, right? So the grouping is revenue, variable costs, contribution margin, fixed costs, and then that will give us our operating income. Okay, if you guys look at the Excel right there, how operating income, right? So operating income equals contribution margin minus fixed costs. I'm giving you guys all these equations just so you guys could have a good understanding of it. All right, so it'll all make sense in the end. Right here, each additional package sold for, let's say, from 0 to 1, right, to increase 5 contribution margin by 80 per package, right? And then here helps Emma recovers more and more of her fixed costs and reduce her operating loss. So if she sells 25 packages, the contribution margin is 2,000, right? And then the quantities exactly recovers her fixed cost, right? So that's her break-even point. We'll talk about that later. So Emma sells 40, right? If she does that, her margin will increase another 1,000 and $200 because it'll be, so all of which becomes the operating income. So as you look across the figure from left to right, you see that the increased contribution margin exactly equals the increase of operating income or decrease in loss. Okay, so this is what we want to take a look at. Okay, so when a company such as like Samsung and like Prada sells multiple products, they calculate contribution margin per units like it's cumbersome. So instead they express it, right, their contribution margin in dollars, right? Like the dollar per unit, they express that in percentages, right? So contribution margin percentage, right? So in this case, right, if we're using the $3,200 divided by 8,000, that would give us 40%, right? So that would be our contribution margin divided by revenue. And so that's how large corporations would use that formula. Now, contribution margin percentage is the contribution margin per dollar of revenue, right? So M earns 40% for each dollar of revenue, right? So that's 40 cents she takes in for each dollar. So contribution margin percentage is a handy way to calculate contribution margins for different dollars amount in revenues, right? So rearrange terms in the equation, defining contribution margin percentage, right? The reason why you want to know these different formulas is like because if you have one part of the equation, you can kind of solve for the other parts, right? So like if you're trying to look for contribution margin and they give you only contribution margin percentage and revenues, and that will give you contribution margin. Or like let's say if you're asking for if they only give you information like contribution margin percentage and then revenues and fixed costs, that will give you like if you're looking for like operating income. Okay, so so take a look at the different ways we could derive relationships between operating income and contribution margin and contribution margin percentage. Okay, so here I'll go over it real quick, right? Contribution margin, operating income, and then operating income. Okay, anyways, so in this case, right here, if Emma sells 40 packages, right? So this would be revenues, right? Revenues would be 8,000. Contribution margin would be 40%. So we got that information. Our actual contribution margin is $3,200. Our fixed cost is $2,000, and our operating income is $1,200, right? So just doing regular math, if you got any of those information, you could figure out how to get the other information, other numbers, but you want to kind of know this to understand how the business operates. Okay, so contribution margin percentage, there's a formula for that, right? So when there is only one product, right? Because this one's the easiest. This is only one product. So in our example, we could do just divide both numerators and denominators of the contribution margin percentage equation to get the quantity of units sold and calculate contribution margin. Okay. So here we are. I actually ran out of time, so you want to pause this and take a look at this slide, okay? All right, guys, thanks.